Visible
Ikaw,
na
ma'am.
ma'am.
Oo. I-share screen lang. Ma-record ko dayon di. Tapos share screen. Timang wala ya. Maano lang ah. Sige na.
Okay, good morning, everyone. So for today, we are going to discuss about Chapter 14, Cash and Accrual Basis. Next slide, please. So we are your reporters for today. I am Caroline Ann P. Balayo, and together with my partner, Zia Kate A. Estidion. Our objectives for today's discussion are: first, to understand cash basis of accounting; second, to understand accrual basis of accounting; third, to describe the differences between cash basis and accrual basis of accounting; and lastly, to be able to prepare adjustments in converting the cash basis financial statements to accrual basis financial statements. Next slide, please. Cash basis. In cash basis of accounting, income is recognized when received, regardless of when earned, and expense is recognized when paid, regardless of when incurred. In other words, the cash basis of accounting does not recognize accounts receivable, accounts payable, accrued income, deferred income, accrued expense, and prepaid expense. So again, we need to take note nga sa cash basis of accounting, ang income, gina-recognize naton when received, regardless kung saan natin siya na-earn. And ang expenses, gina-recognize natin when paid, regardless kung when man siya na-incur. Next. Accrual basis. For accrual basis of accounting, income is recognized when earned, regardless of when received, and expense is recognized when incurred, regardless of when paid. The essence of accrual basis of accounting is the recognition of accounts receivable, accounts payable, accrued income, deferred income, accrued expense, and prepaid expense. So take note nga sa accrual basis, ang income, gina-recognize naton once na-earned, regardless man kung saan siya na-receive, and ang expenses, gina-recognize naton when incurred, regardless kung saan siya i-paid. Diba usually sa actual practice or establishments, they are using cash basis. But for our preparation of financial statements, so we need to convert from cash basis to accrual basis of accounting. So why is this so? So the answer is because of what we call matching principle, wherein dapat nagamatch ang imo income with the expenses. For example, kung may ara ka earned income recorded this month, dapat may corresponding man siya nga expenses incurred. Next slide, please. So at this point, we're going to differentiate the differences between cash basis and accrual basis of accounting. First item, we have sales. Under cash basis, sales is equal to cash sales plus collections from customers. Under accrual basis, sales is equal to cash sales plus sales on account or credit sales. Next, purchases. Under cash basis, purchases is equal to cash purchases plus payments to trade creditors. Under accrual basis, purchases is equal to cash purchases plus purchase on account or payables. Next, income other than sales. Under cash basis, items received are considered as income regardless of when earned. Under accrual basis, items earned are considered as income regardless of when received. For expenses in general, so this expenses in general means like operational and admin expense. Under cash basis, items paid are treated as expenses regardless of when incurred. Under accrual basis, items incurred are treated as expenses regardless of when paid. How about for depreciation? Both for cash basis and accrual basis, depreciation is provided normally. Lastly, for bad debts, under cash basis, no bad debts are recorded because trade receivables are not recognized. So we are not required to recognize doubtful accounts because in the first place, we do not recognize trade receivables under cash basis. Under accrual basis, doubtful accounts are treated as bad debts. Next slide, please. To understand more clearly about the differences between cash and accrual basis, we have here the illustration. ABC company reported the following data, which constitute a condensed description of the business for the first year of operations ending December 31, 2021. We have here cash sales 500,000, sales on account 3 million, collections from customers 2,800,000, cash purchases 300,000, purchases on account 2 million, payments to trade creditors 1,600,000, salaries paid 650,000, office supplies paid 200,000, other expenses paid but 50,000, interest received 40,000, equipment 400,000. The equipment was acquired on January 1 and had an estimated useful life of 10 years with no residual value. The following amounts are determined on December 31. Accrued salaries payable 70,000, office supplies unused 50,000, accrued interest receivable 10,000, doubtful accounts 90,000, ending inventory 400,000. We have here the comparative income statement representing cash basis and accrual basis of accounting for ABC company. So ABC company income statement year ended December 31, 2021. For sales under cash basis, it includes, next slide please. We have here cash sales of 500,000 and collection from customers of 2,800,000 with a total sales of 3,300,000. Under accrual basis, we include cash sales of 500,000 and sales on account of 3 million with a total sales of 3,500,000. Previous slide, please. Cost of goods sold. For purchases under cash basis, it includes, next slide, please. We have here cash purchases of 300,000 plus payments to trade creditors of 1,600,000 with a total purchases of 1,900,000. For accrual basis, we have cash purchases of 300,000 and purchases on account of 2 million with a total purchases of 2,300,000. Previous slide, please. And then we deduct the ending inventory of 400,000. Our cost of goods sold under cash basis is 1,500,000 Under accrual basis, 1,900,000. From our sales of 3,300,000, we deduct cost of goods sold of 1,500,000. We arrive at our gross income of 1,800,000 for cash basis. For accrual basis, from sales of 3,500,000, we deduct cost of goods sold of 1,900,000. We arrive at 1,600,000 gross income. For interest income, under cash basis, we have 40,000 already given in the problem. And for accrual basis, it includes, next slide please. We have here the interest received, 40,000 under accrual basis. Then we add the accrued interest receivable, which equals to the interest income of 50,000. Previous slide, please. For expenses, salaries expense, under cash basis, 650,000, already given in the problem. For accrual basis, 720,000. It is derived from, we have here salaries paid of 650,000 plus accrued salaries payable of 70,000 with a total salaries expense of 720,000. Previous slide, please. For office supplies expense, under cash basis, we have 200,000 given in the problem. Under accrual basis, 150,000 from we have here the office supplies paid under accrual basis of 200,000. Then we need to deduct the office supplies unused of 50,000. It is equal to office supplies expense of 150,000. Previous slide, please. For other expenses, 50,000 for both cash basis and accrual basis. Then doubtful accounts. Under cash basis, we do not recognize trade receivables, therefore, we do not record doubtful accounts. Under accrual basis, we have here 90,000 on December 31 given in the problem. For depreciation, we have 40,000 for both cash basis and accrual basis. It is from the depreciation of equipment amounted to 400,000 divided by its useful life of 10 years. Previous slide, please. We come up to total expenses under cash basis of 940,000. And under accrual basis, we have 1,050,000. We deduct these expenses from our total income. And under cash basis, we have a net income of 900,000. And for accrual basis, we have 600,000. So the next slides will be reported by Ms. Zaya.
Okay. Before we go to Ms. Espidion, Ms. Balayo, I have only one question. Okay.
Yes, ma'am.
Can you hear me?
Yes, ma'am.
Okay. Generally, how do we recognize income and expenses under the accrual and cash basis of accounting? So generally, how do we recognize income and expenses under the accrual and under the cash basis of accounting? Now, generally lang ha, which of the two is in accordance with the matching principle. Which of the two is in accordance with the matching principle?
Okay, ma'am. So in summary, under cash basis of accounting, income is recognized when received regardless of when earned, and expense is recognized when paid regardless of when incurred. In accrual basis of accounting, income is recognized when earned regardless of when received, and expense is recognized when incurred regardless of when paid.
Okay?
So,
Which is in accordance with the matching principle.
so accrual basis of accounting is with the accordance of matching principle, wherein we need to match our income to expenses.
Okay, so what method of accounting is in accordance with the matching principle? Is it the accrual or the cash?
It is the accrual basis of accounting, ma'am.
Okay, so it's when income is earned and not when collected. And it is when expense is incurred and not when paid. No? So you have to take note of the terms. Income is recorded when earned and not when received. And expenses are recorded when incurred and not when paid. Now that is in accordance with the matching principle, and that is the accrual basis of accounting. All right? Okay na, Miss Balayo?
Okay, ma'am. Thank you, ma'am.
Go to Miss Espidion. Okay, continue. We still continue recording. Okay. So your classmates who are not around can continue. I do not know how many of you are 22. Okay, so meaning there are still how many who are not around? 10. So okay lang, we continue with Miss Espidion. What are you going to discuss?
So, good morning, everyone. My name is Zeki Espijon, and I will continue the reporting on accounting problem. More often than not, accounting records are maintained on a cash basis. At the end of the accounting period, adjustments are made for accruals and prepayments in order to convert the cash basis records to accrual basis. To achieve the conversion from cash basis to accrual basis of accounting, the following formulas may be helped. Computation of sales. Cash sales plus the sales on account, trade accounts and notes receivable, and collection of trade accounts and notes receivable, sales returns, discounts and allowances, accounts and notes receivable written off, and trade notes receivable discounted. Total less trade accounts and notes receivable beginning. The beginning of accounts receivable and the notes receivable are deducted because these items pertain to the preceding year and constitute sales of the prior years. The substance of this formula is the reconstruction of the accounts and note receivable because the total accounts and note receivables would represent the total sales on account. Normally, the data concerning the cash sales and the collections from customers are available from the records. So the main problem in the formula is the computation of sales on account. Thus, the approach is to add back all the items that decrease the trade receivables to the ending balance of account receivables and notes receivables. The items that decrease the receivables normally include A. Collections from customers, B. Sales returns, allowances, and discounts, C. Accounts and note receivable written off, D. Note receivable discounted when the notes receivable account is credited upon discounting. The beginning balances of accounts receivable and notes receivable might have been collected during the current year, and some may be subject to returns, allowances, and discounts. Computation of purchases. Cash purchases, purchases on account, trade accounts and notes payable, and and payment of trade accounts and notes payable, purchase returns, discounts, and allowances, total less trade accounts and notes payable beginning. The beginning balances of accounts and notes payable are deducted because these items pertain to the preceding year and constitute purchases of the preceding year. The substance of the formula is the reconstruction of the accounts and notes payable because the total accounts and notes payable would represent the total purchase on account. So equals total purchases accrual basis. Normally, the data pertaining to the cash purchases and payments of trade payables are available from the records. So the main problem is the computation of purchases on account. Thus, the approach is to add back all items that decrease trade payables to the ending balance of accounts payable and notes payable. The items that decrease trade payables normally include A. Payment of accounts payable, B. Payment of trade notes payable, C. Purchase returns, D. Purchase allowances, and E. Purchase discounts. The beginning balance of accounts and notes payable might have been paid during the current year, and some may be the subject to discounts, returns, and allowances. So deferred income. Deferred income or unearned income or pre-collected income is income already received but not yet earned. Thus, deferred income is a liability account. This is when we receive payment by a customer for something but haven't actually earned the income. So we haven't delivered the goods yet. It would occur in a situation where a customer is paying in advance for goods that we are going to deliver in the future. Examples of deferred income are unearned rental income and unearned interest income. The deferred income beginning is added because this is received in the preceding year and earned in the current year. The deferred income ending is deducted because this is received in advance in the current year and to be earned only in the next year. Accrued income. This is the exact opposite of deferred income. Accrued income is income already earned but not yet received. Although it is not yet in hand, accrued income is recorded on the book when it is earned in accordance with the accrual accounting method. It is a receivable and therefore an asset. Examples are accrued interest receivable, accrued rental receivable, or accrued royalties receivable. Accrued income beginning is deducted because this is already recognized as income in the preceding year, although it is received only in the current year. Accrued income ending is added because this is already earned in the current year, although not yet received. It's to be received next year. So balikan to ang formula. Income other than sales. Income received cash basis, add the deferred income beginning and accrued income ending, total less the deferred income ending, less accrued income beginning. So the income for the current year accrual basis. Prepaid expenses. Prepaid expenses are expenses paid in advance but not yet incurred and therefore are assets. Why are prepaid expenses considered as an asset? Prepaid expenses are recorded as an asset on a business balance sheet because they signify a future benefit that is due to the company. Prepaid expense are amounts paid in advance by a business in exchange for goods or services to be delivered in the future. Examples are prepaid insurance, prepaid taxes, prepaid rent, prepaid interest, and prepaid salaries. The prepaid expense beginning is added because this is paid in the preceding year and only expensed in the current year. The prepaid expense ending is deducted because this is paid in the current year and to be expensed next year. The accrued expenses. Accrued expenses are expenses already incurred but not yet paid and therefore are liabilities. In other words, a company's obligation to pay for goods and services that have been provided for which invoices have not yet been received. They are classified as current liabilities,
Yeah.
meaning they have to be paid within a current 12-month period and appear on a company's balance sheet. Examples are accrued salaries payable, accrued interest payable, and accrued rental payable. Accrued expense beginning is deducted because this is incurred in the preceding year, although only paid in the current year. Accrued expense ending is added because this is incurred in the current year and to be paid next year. So the formula: expenses paid cash basis, add the prepaid expenses beginning, add accrued expenses ending, total less prepaid expenses ending, accrued expenses beginning is equals to expenses accrual basis. So that's all, ma'am.
Okay. Now, before we go to the problems assigned to you, by the way, there's only one problem. Are you going to share discussing the problem or only one of you? Two of you?
Ma-share kami, ma'am.
At sige, oo. Sige, Miss Espidion, normally, what items increase or decrease accounts receivable in terms of computing sales? Normally, what items increase or decrease accounts receivable in terms of computing sales? And also, what items increase or decrease accounts payable in terms of computing accounts payable? So I'll repeat, what items increase or decrease accounts payable in terms of computing purchases? Okay? Sige.
The items that decrease receivables normally include collection from customers, sales returns, allowances and discounts, accounts and notes receivable written off, notes receivable discounted, and for the items decreased trade payables normally include payment of accounts payable, payment of trade notes payable, purchase returns, purchase allowances, and purchase discount.
So going back to your accounts receivable, actually accounts receivable as it relates to sales, no? My first question was, what are the items that increase accounts or that increase accounts receivable and what are the items that decrease? So what are your answers in connection with the items that increase accounts receivable? What are the items that increase? Increase, Anay?
Increase in accounts receivable are the company's sales are increasingly paid with credit as the form of payment instead of cash.
Okay.
Decrease in accounts receivable, the company has successfully retrieved cash payments for credit purchases.
Accounts receivable, as we understand that accounts receivable is related to sales, while it's accounts payable that is related to purchases. Now, going back to my first question, the question was, what items tend to increase accounts receivable in terms of finally computing the total sales? Now, this is in connection with the accrual basis. Okay. Anyway, I'll revise the question. What items tend to increase sales, no? Or what are added in order to increase sales, or those items that have positive effects on sales. So meaning these are the items that will be added in terms of computing total sales. And what are the items that will be deducted in connection with determining total sales? Okay, so let's start. What are the items that are added? So it will finally arrive at the total sales. And what are the items that are deducted? Now, these are in connection with the computation of sales. The other question relates to computation of purchases. What are the items that are added and what are the items that are deducted in finally arriving at total purchases? Okay? Will you start now? By starting with
Sa sales, ma'am.
sales sa anay.
So, sa sales, ang mga items na gina-add are trade accounts and notes receivable, collection of trade accounts and notes receivable, sales returns, discounts and allowances, accounts and notes receivable written off, and the trade note receivable discounted. Tapos ang decrease pag ginamit sa dito, iyan ko, ma'am.
Okay, what are those that should be deducted in arriving at the total sales? What are
And
that should be deducted?
And the items that should be deducted are the collection from customers, sales returns, allowances, and discounts, accounts and notes receivable written off, and notes receivable discounted. And for the purchases, the account that should be added are the trade accounts and notes payable, payment of trade accounts and notes payable, purchases, returns, discounts, and allowances. And the items that should be deducted are the payment of accounts payable, payment of the trade notes payable, purchase returns, purchase allowances, and purchase discounts.
So actually, you are now dealing with determination of purchases, which from the total, you only deduct your trade accounts and notes payable beginning. Actually, it will end up with the total purchases under the accrual basis. And likewise, in determining sales under the accrual basis, from the total, you just deduct the trade accounts and notes receivable beginning. So you end up with your total sales under the accrual basis. Okay? That's all for the theory. Now we proceed to the problem solving. And I gave you only one problem. That's 14-32. Now you start.
Okay. The problem assigned to us is problem 14-32. Please refer on your book, page 412. So in this problem, we have three requirements. I will present the answers for requirement 1 and 2, and Zaya will be assigned for requirement number 3. Next. Here's the problem. Zamboanga Company began operations on January 1, 2020. During the year ended December 31, 2021, the accounting records have been maintained on a double entry basis, but the cash basis of accounting has been employed. The entity prepared the following trial balance prepared from the records on December 31, 2021. We have here cash, 1,500,000, sales, 4 million, purchases, 2 million, expenses, 1,500,000, equipment, 200,000, share capital, 2 million, land, 800,000, building, 1,500,000. Mortgage payable, 900,000, retained earnings, 600,000. The entity decided to convert the accounting records to accrual basis on December 31, 2021. So from the problem, as we have noticed, there is no accounts receivable and accounts payable in the given because ang sa record is para siya sa cash basis of accounting. So need natin i-convert into accrual basis of accounting. Next. We have 3 requirements for this problem. First, to prepare adjusting entries on December 31, 2021. Second, to prepare an income statement for the year ended December 31, 2021. And lastly, to prepare a statement of financial position on December 31, 2021. Next. Let's answer the first requirement wherein we need to prepare adjusting entries. Provided with us is the additional information. So number 1, accounts receivable, December 31, 2020 of 200,000. December 31, 2021, 250,000. So our entry is, next. For adjusting entry number 1, in order to close December 31, 2020 unrecorded accounts receivable, which is collected in 2021 and credited to sales, our adjusting entry will be debit to sales 200,000 and credit to retained earnings of 200,000. For December 31, 2021, we have unrecorded accounts receivable of 250,000. So we need to adjust by debiting accounts receivable 250,000 and crediting sales of 250,000. Previous slide, please. Number 2, the sales of 2020 included 40,000 deposited by a customer for merchandise to be delivered in 2021. Our entry will be, next slide, please. We have here debit retained earnings 40,000 and credit sales of 40,000. So as stated, that the 2020 sales included the 40,000 advance payment from a customer to be delivered in 2021. So this means that the 40,000 is an actual sales of 2021, but was recorded during the 2020. In other words, this was already recognized as income of 2020 and close to retained earnings. So that's why in order to adjust, we need to debit retained earnings and credit it back to sales of 40,000. Previous slide, please. Number 4, accrued expenses, December 31, 2020, 79,000. December 31, 2021, 100,000. Please go back to previous slide. Okay. I'm sorry, number 3 palang gali kita. So number 3, accounts payable, December 31, 2020, 350,000. December 31, 2021, 280,000. Next slide, please. In number 3, we have unrecorded accounts payable of 350,000 on December 31, 2020, paid in 2021, and debited to purchases. So our adjusting entry will be debit retained earnings 350,000 and credit purchases of 350,000. For 2021, the 280,000 here represent an unrecorded accounts payable of December 31, 2021. So we need to adjust by debiting purchases and crediting accounts payable of 280,000. Previous slide, please. Number 4, accrued expenses. December 31, 2020, 79,000. December 31, 2021, 100,000. Our entry will be in number 4, we have unrecorded accrued expense of 70,000 on December 31, 2020 and paid in 2021 and charged to expenses. In other words, the retained earnings was overstated because of the overstatement of net income. So to adjust, we need to debit retained earnings and credit expenses of 70,000. In December 2021, the accrued expense is 100,000 and the adjusting entry is debit expenses, credit accrued expenses of 100,000. Previous slide, please. Number 5, merchandise inventory, December 31, 2020, 150,000, December 31, 2021, 210,000. Our adjusting entry will be, next slide please. Number 5, we have unrecorded inventory of December 31, 2020. To adjust, we need to debit merchandise inventory January 1, 2021, 150,000, credit retained earnings of 150,000. So this pertains to the beginning inventory. For the unrecorded inventory on December 31, 2021, our adjusting entry is debit merchandise inventory December 31, 2021, 210,000, and credit income summary of 210,000. So this is for the ending inventory. Next. Next slide, please. Number 6. Previous slide. Okay. Number 6, the purchases included 100,000 cash advance to a supplier for merchandise to be delivered in 2022. This means that there is no purchase yet, only an advance payment to supplier for the delivery of the merchandise in 2022. So our adjusting entry will be, next slide please. Number 6, we need to debit advances to supplier 100,000 and credit purchases 100,000. Previous slide, please. Number 7, the equipment was acquired on July 1, 2020. The estimated life is 10 years. Next. Given in the problem, the value of the equipment is 200,000. So our adjusting entry is debit depreciation of equipment 20,000, debit retained earnings of 10,000, and credit 30,000 accumulated depreciation of equipment. So diin naghalin ang 20,000. So it is from 200,000, the value of the equipment divided by estimated life of 10 years. And then, so this 20,000 pertains to the depreciation of 2021. How about the 10,000? So it is from 20,000 depreciation recognized in 2021 multiplied by 6/12. 6/12 from July 1 as stated in the problem that the equipment was acquired on July 1, 2020. So from July 1 to December 31, 2020, we have 6 months, 6 over 12. So it is equal to 10,000. So it referred to the unrecognized depreciation of 2020. Number 8, previous slide, please. The land and building are acquired on January 1, 2020. The life of the building is 5 years. So given in the problem, the value of the building is 1.5 million. So we need to divide it by 5 years estimated life. So it is equal to 300,000. Our entry will be debit depreciation of the building, 300,000, retained earnings, 300,000, and credit accumulated depreciation of the building, 600,000. So in the depreciation of the building, 300,000, it pertains to the depreciation for 2021. And the retained earnings of 300,000 is for the unrecorded depreciation for 2020. Number 9, previous slide, please. Number 9, it is estimated that 10% of the outstanding accounts receivable on December 31, 2021 may prove uncollectible. Next. So given in our entry number 1, accounts receivable, December 31, 2021, we have 250,000. So we need to multiply the 250,000 by 10% to arrive at our doubtful accounts of 25,000 debit and credit to allowance for doubtful accounts, 25,000. Number 10, previous slide, please. The mortgage was on land and building and was obtained on September 1, 2021. The interest rate is 12% per annum, payable semi-annually on September 1 and March 1. The mortgage will mature after 4 years. Next. So the amount of mortgage payable, which is 900,000, was given in the problem. So our adjusting entry will be debit interest expense of 36,000 and credit accrued interest payable of 36,000. So where did we get that 36,000? So it is from 900,000 value of the mortgage and multiply by 12%, multiply by 4 over 12. 4 over 12, so the interest from September 1 to December 31, 2021. So we have 4 months. So that's all for requirement number 1. Let's proceed to requirement number 2. So in requirement number 2, we are required to prepare an income statement.
Dali lang. Miss
Yes, ma'am.
Malayo. I'll ask question before you go to requirement number 2, okay? Batian mo ko. Miss Malayo, can you hear me?
Yes, ma'am.
Okay. Kaya nga ako nga laptop naga-Christmas light na ho. Delikado ni, bilaan mong wifi daw kan stable. How come that in the summary, you have the summary on page 379. Now it is stated that under both the cash basis and accrual basis of accounting, depreciation is provided. Okay, I hope you have found that. Under the cash basis and under the accrual basis of accounting, depreciation are provided, no? Sa duhagid. Now, how come that in your problem, you still made an adjusting entry for depreciation on the machinery and equipment and on the building for the previous year. Meaning, you are not only recording the depreciation for the current year, but also for the previous year. Kaya hindi mo tambal depreciation for the previous year. Now, what it simply shows that depreciation of the previous year was not recorded. Am I correct?
Yes, ma'am.
Okay, so meaning depreciation for the previous year was not recorded on both property, plant, and equipment. So meaning the company did not record depreciation in the previous year in contrast to the summary guide. Now, what tells you or what indicates that depreciation was not recorded last year? What is the indication? Or how do you prove that depreciation was not recorded in the previous year? How do you know? How do you know that in the previous year, depreciation was not recorded? How do you know?
For entry number 7, mom, it says here that the equipment was acquired only on July 1, 2020. So we need to adjust as we are making adjustments for December 31, 2021.
Okay. So meaning, you are preparing 2 entries. One to record the depreciation in 2021. However, you have an entry referring to 2020. Okay? Naghimo ka gidira duha ka entries. Am I right?
Yes, ma'am.
Okay. So, ano ang indication nga sang 2020 wala gid ang company naka-record depreciation. Nga ang hambal sa aton nga summary guide both under the cash basis and accrual basis, depreciation should be normally provided. Ang ako niya nga ginapamangkot, paano mo nabalaan nga sa previous year, wala ang company ka-record depreciation. Nga ang sa 2021, naghimo kapagid sa adjusting entry even for the previous year. Paano mo mabalaan nga wala siya ka-record depreciation? Ha? How do you know nga wala gid siya ka-record depreciation in the previous year? Not only in the current year, but also in the previous year. So what would tell you nga wala gid siya ka-record? Kaya nakita mo, you are given the trial balance on December 31, 2021. No? Di ang pag-acquire sang fixed asset, 2020 pa mo, you are given the trial balance ending 2021. Now, what indicates or ano ang imong nga hint dira nga wala gid siya ka-record depreciation? Ha?
It is because, ma'am, it is mentioned in the problem the company maintained a double entry basis, but cash basis of accounting is employed in the first place. So in our conversion of the accounting records to accrual basis, so we need to have 2 entries of depreciation from 2020 and 2021?
Ang ang gina-credit mo sa 2020? Nag-debit ka depreciation o kung nag-debit ka retained earnings. Sa imo nga 2020 nga depreciation, ano ang imo nga entry? Kay duha ka bilog imo entries for recognizing depreciation on the equipment. May ara pagid sa building, pero sa equipment lang duha na nga daan imo nga entries. Am I right? Hello? Am
Yes,
I
ma'am.
right? O sige. By looking at the trial balance on December 31, 2021, ano ang imo nga hint nga ang company wala gid ka record depreciation? Ha? Ano ang imo hint nga ang company wala gid ka record depreciation even from 2020? Sabi, regardless of the method used. Paano mabalaan yung company? Wala gid ka record depreciation? O,
Ma'am, yes,
sige.
ma'am.
Oo, continue.
As there are no changes in the value of the building and the equipment, ma'am.
Ano ang nagapa-decrease sang value sang fixed asset normally? Ano nga account?
It is the depreciation, ma'am.
Ha? Ano nga account? What account normally decreases the carrying value or the book value of a fixed asset? Actually, ginabuhi na eh. Or na equipment or building. Less, ano?
It is the accumulated depreciation, ma'am.
Okay. So in the trial balance on December 31, 2021, do you find the account accumulated depreciation? Do you
There
find?
is no accumulated depreciation, ma'am.
Oh, normally, when you record depreciation expense, normally, what is your entry? Normally, when you record depreciation entry, what's that entry? Paano mo gina-record ang depreciation? Abe, ano debit? How do you record depreciation expense? Normally, in accounting 1101, you record depreciation expense. Normally, ano imo entry? Sa iban bala, hindi lang ga-relate sa nga problem. What is your entry in recording depreciation expense? Normally. Ha?
Normally, in recording depreciation, we debit depreciation expense and credit accumulated depreciation account, ma'am.
Okay, so normally, in the trial balance given at the end of 2021, can you find the account accumulated depreciation? Can you find that account?
There is no account as accumulated depreciation, ma'am.
Oh, which merely indicates that the company did not record depreciation expense. Kaya nga wala sang accumulated depreciation. Meaning, wala gid siya ka-record. Pero ang aton nga summary guide, gahambal nga under both bases of accounting, be it cash or accrual basis, depreciation is normally provided. Kung dira, wala, so meaning, wala gid siya ika-record depreciation expense. Okay, amo na ang guaya. Oh, so you continue with requirement 2, please. Sige.
Okay, for requirement number 2, we need to prepare income statement. So first, I will present its content, and later on, I will discuss the computations for sales, purchases, and expenses. So just take note of those. So we have here Zamboanga Company income statement, year ended December 31, 2021. We have sales of 4,090,000, cost of sales, merchandise inventory, January 1, 150,000, purchases 1,830,000 equals to goods available for sale of 1,980,000 less merchandise inventory December 31 of 210,000. From sales of 4,090,000 less cost of sales of 1,770,000, we arrive at our gross income of 2,320,000. For expenses, we have 1,530,000, depreciation of equipment 20,000, depreciation of the building 300,000, doubtful accounts 25,000. Interest expense 36,000 with a total expenses of 1,911,000. So we deduct it from the gross income. So our net income will be 409,000. Next. So here are the computations of our sales, purchases, and expenses from our previous income statement. So for the computation of sales, we have here sales per book as given in the problem, 4 million. Then we add accounts receivable of 250,000 on December 31, 2021. It is from our entry number 1, wherein we debit accounts receivable and credit sales. Then we also add advances from customer in 2020 that we credit to sales in our entry number 2 of 40,000. So total 4,290,000 less accounts receivable December 31, 2020 of 200,000. So it is from our entry number 1 wherein we debit sales and credit retained earnings. So our total sales for accrual basis is 4,090,000. Then for computation of purchases, our purchases per book, 2 million as given in the problem. Then we add accounts payable December 31, 2021 of 280,000. It is from our entry number 3, wherein we debit purchases and credit accounts payable. Then the total is 2,280,000 less accounts payable December 31, 2020 of 350,000. It is from our entry number 3, wherein we debit retained earnings and credit purchases. Then advances to supplier of 100,000 from our entry number 6, wherein we debit advances to supplier and credit to purchases. So our total purchases on accrual basis is 1,830,000. Lastly, for the computation of expenses, we have expenses per book, 1,500,000. It is given in our problem. Then we need to add the accrued expenses on December 31, 2021 of 100,000. It is from our entry number 4, wherein we debit expenses and credit accrued expenses. Total 1,600,000, then less accrued expenses, December 31, 2020, of 70,000. It is from our entry number 4, wherein we debit retained earnings and credit to expenses. So our total expenses on accrual basis is 5,530,000. So that's all, ma'am, for requirement number 2. So let's proceed to requirement number 3 by
Okay.
Zelia.
We go to the last requirement. Okay.
So for number 3, prepare a statement of financial position on December 31, 2021. This is Zambongo Company Statement of Financial Position, December 31, 2021. So the current asset, cash is 1,500,000. Accounts receivable net allowance, 225,000 is from the accounts receivable, 250,000 minus the doubtful accounts on the adjusting entries, which is 25,000, is equals to 225,000. Then add advances to supplier, 100,000, and then merchandise inventory, 210. So the total of the current asset is 2,035,000. For the non-current asset, land, which is given 800,000, building 1,500,000, less accumulated depreciation of 600 is equals to 900,000. And for the furniture and equipment, 200,000, less accumulated depreciation, which is 30,000, is equals to 170,000. So the total of non-current asset is equals to 800,000 plus 900,000 plus 170,000 is equals to 1,870,000. Total assets would be 2,355,000 current asset plus the non-current asset 1,870 is equals to 3,905,000. For the current liabilities, accounts payable 280,000 plus accrued expenses plus accrued interest payable is equals to 416,000 total current liabilities. And for the non-current liability, mortgage payable 900,000, and for the equity, share capital 2 million, retained earnings 589,000 is equals to 2,589,000.
Okay.
Note number 1.
Continue.
For retained earnings, so the computation for retained earnings is the unrecorded accounts receivable December 31. Okay, again, retained earnings per book is 600,000. The unrecorded accounts receivable December 31, 2020 is 200,000 plus unrecorded inventory on December 31, 2020, 150,000 is equals to 350,000. And total is 950,000. Less the unrecorded accounts payable on December 31, 2020, 350,000, unrecorded accrued expenses, 70,000, and the accrued unrecorded 2020 depreciation, 310,000 is from the 10K of equipment and 300K of building. Then advances from customer retained earnings, 40,000 is equals to 770,000. So we deduct the 950 to 770,000 equals to adjusted retained earnings on January 1, 2021 is equals to 108. So for note number 1, retained earnings, adjusted retained earnings on January 1, 180 plus the net income of 409 from the income statement is equals to retained earnings December 1, 31 is 589,000.
Okay, question. How did you determine your accumulated depreciation for the two fixed assets? How did you determine your accumulated depreciation for the two fixed assets? Can you hear me? Means,
Yes, ma'am.
Oh, how did you determine your accumulated depreciation for the two fixed assets?
Did add ko ma'am ang entry number 7 nga retained earnings from the equipment 10K kag ang retained earnings sang building at 300K.
So,
Is cost
sige na. Accumulated depreciation of building is how much? Total? Ang imo yung equipment.
10K ang equipment, ma'am.
10 lang ang total? Ang total 10 lang? 10 ang 1 year lang, ang last year pa. Total ya, 10 lang on the equipment. 10 lang get. No? 10 lang get. O sige, never mind na lang. Now class, I'm going to share screen the solution to 14-32. Share screen lang ha, which may also be the same sa ilang answers. So 14-32. Hello. I am going to share screen the solution to 14-32. And for the solutions of the multiple choice problems, I am going to discuss this, or we are going to discuss this recorded. So please open your YouTube. Open the YouTube in the afternoon para nga i-discuss ko ang multiple choice problems. I will be discussing the multiple choice problems. So in the YouTube na kamo mag-open karon sa hapon. Did you hear me? Ha?
Okay, ma'am.
Sa
May
YouTube,
question.
oo, 14-1 up to the end of the multiple choice problems. I-YouTube ko na lang karon, i-discuss, ako ma-discuss, para nga buwas, we are going to begin with chapter 15. Any questions?
Ma'am,
Ano?
may ka pa ma'am buwas kag sa Friday man no, mas may exam.
Oo kamuya may exam kamuya. Sa iba nyo subjects, may exam kamuya. Kita yati, way ta exam lunis. Kwat nyo? O sige, oo. At yan na may kala ng dasun nga klase.